Robinhood made its name, as you know, as the place to trade meme stocks. Now it's maturing with its investor base, rolling out some financial services like wealth management and private banking. For today's Tech Check, our Kate Rooney spoke to Vlad Tenev about the news. Stocks getting defended as well on the sell side today. Morning, Kate.
Yeah, Carl. So Robinhood's new robo-advisor, private banking, and wealth management, all of those features you mentioned are the latest signals this company is really growing up with their client base and also looking to court more high net worth, sophisticated investors. The robo-advisor is competing on fees. It's 0.25% annually. That is capped at $250 a year, but that's only for gold subscribers. It's also offering certain transfer incentives as people start to sign up. The subscription aspect, though, is a key way Tenev says they're going to break even. He did admit, though, there is skepticism. This has not worked that well in financial services historically, says they're using Amazon and Costco for inspiration.
If you're an Amazon Prime subscriber, if you need to buy something and you're fine with it being delivered the next day, Amazon, once you're a Prime subscriber, tends to own more of that share, more of that e-commerce flow. Same with Costco. Costco membership kind of becomes a loyalty program. And for financial services, loyalty is equivalent to wallet share.
And Robinhood now has a new list of competitors as it expands into these arenas. It's got about $200 billion in customer assets, which pales in comparison if you look at Fidelity and Vanguard. It is also now going up against the UBSs and Merrills of the world on private wealth. Tenev is betting on the wealth transfer. He says they're trying to capture those assets as baby boomers pass money onto their kids. They are also looking to differentiate with AI. They have a new AI research assistant called Cortex. The bar, he says, is still really high for using AI around investment advice.
We wanted to start with the areas where customers have questions that AI in its current capabilities can answer very, very reliably. Because in financial services, the tolerance for hallucinations and not being able to interpret the results is quite low. So we have to make sure the results are interpretable and also hallucination-free.
And guys, he said building the technology on top of these AI models to prevent some of those mistakes was the hardest part of this launch. He did hint that AI models in the future might help generate investment ideas. We're not quite there yet, guys. Back to you.
Hey, Kate, we've gotten so used to every month looking at options activity or trading in crypto. I mean, are there new metrics that we're going to have to start judging the company by?
That's true. I asked sort of, how should investors think about you guys? Are you a bank and a wealth manager? Are you a tech company? And they are sort of trying to be this one-stop shop for finance. The way that Wall Street, for now, until this is proven out and we can see how they monetize it, it's going to be trading volume. It's going to be sort of the payment for order flow fees on the back end. And overall, what they're doing, you've seen the volatility in the stock. They are still really indexed to market activity. I did ask about retail investors, though, and said, how are people reacting to some of the tariff volatility? There's a lot of dip buying. There's still a lot of interest in the tech names and NVIDIA. So they're still seeing a lot of market action despite what we're seeing in the broader markets. They tend to actually benefit when markets are more volatile. But I think in the long term, maybe on a 10-year horizon, people will start giving them a little bit more credit for either subscriptions or some of the more stable kind of interest-earning sides of the business.
Well, whatever it is, it's working. I know the stock's off the highs, but it's still up like 120% over the last year. Kate Rooney. Kate, thank you.